Welcome back to Cheche. We're live on Citizen TV. There's a lot of fuss about the Banking Act Amendment bill. The banking community says if the president gives his assent, Kenya will be an unattractive destination for debt investment and risky borrowers will be unable to secure bank loans. But with loans currently priced at 18 to even 27%, the public perception is that capping interest rates is a good thing. Banks have generally been unfair to borrowers. The bill would also reward savers by giving them a minimum of 70% of the central bank rate on their deposits. So today's guests have been helping us understand the different positions. They are Habil Olaka, the CEO of the Kenya Bankers Association, and Nzetse Were, a development economist. And so before the break, we were talking about the variance between the interest rates you get on your deposits versus the interest rates you're charged for borrowing, and I think you want to pursue that.
I wanted to know on two things. If you have a savings account, and many Kenyans have savings account, not current. Ordinary Kenyans save money in savings account, and the interest they get is 4%. But the same Kenyan, when he wants to borrow, that's the same money Kenyans have deposited in banks. The interest is you have had 18%. That's what the government want to bring. If you have a fixed account, and that's maybe I say 3 years or 1 year, the maximum interest you can get is 6%, 6.5. But when you borrow the same money, you ask for 18. Why?
I think the conversation you're bringing in is about spreads. Spreads basically the difference between the rate at which the deposits are remunerated at and the rate at which loans are priced at. So the difference is what is called the spread. And maybe I can take you back to 2002 when we had a new government coming in, the Kibaki government. At that point in time, the spread was actually 20%. Now, move forward to 2015. The spread has actually come down from 20% to 10%. Right now we are operating in the range of about 10%. Now, there are a number of things that have been done in order to bring that spread down to the current 10%. So where are we moving? I think we are moving in the right direction. The spread has been a concern for the banking sector, a concern for the banking public, because the banking public are the depositors and they are the borrowers. So basically that spread hits them directly. But the banking industry has been doing everything possible to bring that spread down. And you can see the progress is that moving from 20% to currently 10%, and actually is actually continuing to move down.
Well, it has taken eons. If you look at multinational banks, which are operating in this country, the interest rates in their countries, their origin, they make their money from Africa and that world. Is it fair?
Now, talking about other economies, I think other factors come in.
No.
Let's be honest.
Yeah.
What rate of inflation do you have in Kenya currently? And what rate of inflation do you have in the other countries you're mentioning? For example, in the European Union, in America.
US and UK.
You see, the rate of inflation is quite different. And inflation determines the interest rates in the market. So you wouldn't say, for example, for them, they're talking actually about negative interest rates. You see, in Kenya, I think the current circumstances we have in the Kenyan economy are quite different. So we need to be realistic to that factor.
Okay, let's come to the economist. It sounds like you were US trained. So if we have interest rates at just under 1% in the US and the UK and the EU, what's going on beyond the inflation rate?
Well, people aren't borrowing. I think that's part of the problem. So what they're trying to do is use interest rates to stimulate borrowing so that people start borrowing again. But as Olak was saying, is that in Kenya it's a very different situation where there's so much pressure to look for finance that banks can price their products a lot higher. And I think the other part of the story that we need to understand as Kenyans is that all of us just think of loans when you want to finance a business. We all go to the bank, but there are so many different types of financing, like equity, angel investors, venture capital. So I think part of the problem is that we as Kenyans are not financially literate. So we think if I want to expand my business, I just must go to the bank. But there are these other things, especially as our economy develops and as foreign players bring money to our markets, there is other ways you can finance your business ventures. So I think we should take that on as Kenyans as well.
So does this then go back to the point you were making about poor fiscal management?
Well, it does in some ways. I mean, the fiscal management issue for me is a massive one, because when you say you're going to borrow one amount and then you balloon that borrowing, that signals to banks that they can start hiking up rates because government is the biggest borrower.
You're not talking about government, not individuals.
But government has an effect on interest rates in the country. You know, if they stayed within the range that they said they were going to stay in, then there wouldn't be this pressure to push up interest rates because government is borrowing, therefore we can now make, you know, more money. So I think there's also a conversation around, can we use more accurate figures when we're putting together our budgets?
I'm just wondering, could the high interest rates be having an effect on the failure in tax collection as is precedented by the government?
I think
and how would the government mitigate that? Because I think that is the genesis of all this. Like she said, it's like a case of a chicken and
an egg. Absolutely. I think that what you have to realize is that government is falling short of tax revenues because of two things. One, their spending is ballooning. And I think that ballooning in spending should be that we need a conversation about that as Kenyans. Is that why are we going into trillion shilling budgets? The other problem is that the KRA, there are so many Kenyans that function outside the tax net. If you look at the informal economy, which is massive in this country, about 80% of Kenyans are employed in the informal economy. That is an economy that is largely not taxed. So government is also saying there are thousands and millions of you guys out there making money, but we are unable to collect tax. Now for me, the solution is not for government to start taxing, because the struggle with the informal economy is that they're not very profitable. These guys who make, you know, beds on the side of the road.
And yet I have to pay Habil so much money in loan interest.
And the impact of that, the impact of the bill is exactly what she's talking about. You see, what will happen is that because banks will then now be constrained in terms of lending, most of the activity now will move into the informal market. The lenders will be, you know, doing business as the Shylocks. On the deposit side, because the bank cannot pick money that it cannot lend, most of that money will now be directed towards the informal sector, which means that the Shylocks now will be having access to the finance that they need for lending. So most of the activity will move from banks to the informal sector.
So
what does KRA have? KRA is not able to collect the due taxes from the Shylocks.
From
the banking sector, you can collect the taxes appropriately.
Who are the Shylocks? Who are you calling Shylocks?
Shylocks basically is the informal sector, the informal.
Are they the people we see saying, you know, give us you get a loan, 30-day loan, give us your logbook and whatever?
Absolutely.
Those are the Shylocks.
Unregulated. What I mean is that those that are not banks, therefore not regulated, that's where the business will move into. Because this bill here, the law, does not regulate them. It doesn't cap their interest rates. And
so in the same way that we have seen regulations come up for the banking sector, microfinance, SACCOs and things, can we not regulate those Shylocks? You say it's not happening at the moment, but could it not happen?
Well, I don't know how you'll regulate the Shylocks because they are operating informally.
But that's how microfinance started. That's how the SACCOs and chamas started.
For example, the microfinance, it's only the deposit-taking microfinance that are actually regulated. The rest of the microfinance sector is not regulated, and it's not possible to regulate them.
To me, it looks like you're talking like when second-hand cars came in this country. People were selling cars in showrooms from wherever, newer cars. They were very opposed to that. They were saying this second-hand cars, blah, 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 blah. Before it came, your banks, those multinational banks, were not taking even, I used to see teachers, they would not even accept deposits if you couldn't save
5,000.
10,000 actually, it used to be.
And you had to maintain 5,000 at least.
In fact, Barclays Bank closed many branches because they couldn't deal with these poor people. And the same language you are talking about.
There's a tension.
So the same language you are talking now, that Shylocks will come because banks make excessive profit.
Abnormal profit.
Abnormal. Is the term, it's abnormal. Now you are fearing your
into.
Yeah. And that's the kind of language the Matatu people used to say when the bus people, when Matatus came. Second-hand cars, they sell us.
So your point is made about the language that you know, this preserve is being threatened, your monopoly and your privilege, and that's what, when we listen to you talk, that's what we're hearing. And history has shown that that sort of talk hasn't really held any water.
I think there are 2 points there. One is that you seem to be saying that let the informal business prosper. let lending, let credit get out from the formal banking sector into the informal sector. We already know that it's prospering out there, but you know what's happening out there. What rates are we talking about? They are not capped. Currently, the Shylocks, how much are they lending you at? Exorbitant rates. Kenyans are suffering actually not because of the banking sector, but because of what's happening out there in the informal sector. That's where the rates are.
We need to understand that on one hand, people are going to the informal sector because they have no other choice, but on the other hand, they're going to the informal sector because they'll get money.
But also it's easier.
And that's why innovation in the banking sector is trying to ensure that we can be able to have products that can be able to talk to them, can be able to access them.
No, I think Anzatsa's point has to do with, think about when equity came in and people were walking around. Backing and forthing. You think that you have, achieved something, and then they ask for something new. And not many people have that kind of time, nor the, access. If you're going back and forth, traveling 2 hours to deposit the next piece of paper, and then the next piece of paper, and then the next piece of paper. So whoever is closer to you becomes more attractive.
Yeah, but also, the innovation is moving in that direction. We read now about
it's taken you quite a while, hasn't it?
Agency banking.
Right.
Agency banking was actually introduced purely because of solving that problem. Because banks could not be able to have brick and mortar deep down into the rural areas. Agency banking then was, agency banking was introduced. Because then now with that, banks can be able to leverage on the existing infrastructure.
How does agency banking work?
Banking basically is, what you mean is that you can, for example, use a chemist, you can use a petrol station, you can use a supermarket, you can use a pharmacy, you can use, the mobile, agents to be able to provide basic banking services. So the bank is now moved closer to the community. So you can be able to put your deposit, you can be able to access basic banking facilities. And most of our banking needs are not the sophisticated transactions.
But not the loan.
You can be able to access the loan through the agency banking. They provide actually basic banking services.
I'm just wondering,
you require.
Are banks really interested in the common mwananchi? I'm asking that because from where I sit, I see you're campaigning about the economy, avoid inflation, and you're campaigning about your interest as banks. I'm wondering, she mentioned something very vital, the culture of saving. Why can't banks give it a positive approach, encourage saving amongst Kenyan citizens so that more people bring their money to you, so that this thing is regulated without hurting anybody? Because as it is now, banks are hurting the common mwananchi. I get a loan because I'm desperate, I can't repay the loan, I have to be auctioned. It's getting from bad to worse. Why can't you encourage the culture of saving?
I think, and that's a good point you have in terms of trying to encourage the culture of saving. We really need to have proper, improved saving culture within the Kenyan community. I think most of what you call savings are not actually savings. We put money in an account and it's actually a transacting account. So you want to access the money as and when you need it. That's not saving. Saving, you put an amount aside and you keep it for the long haul. You see, that money you put aside, not the one you use for transacting.
We understand all of that.
Yeah. So if you can actually put money aside purely for saving, and you have got savings products that are purely saving, then banks will actually be able to remunerate you appropriately for that amount.
No, you're not answering the question. Hang on, you're not answering the question. We understand all of that. We understand what saving is. And the question that Charles has asked you is, why can't banks encourage saving, take responsibility for the saving culture in Kenya?
Why can't they invest in saving, a saving culture? You want to reap from where you've not sown as banks. That's what I'm saying.
Yeah, I mean, I think that's a point that we take in the sense that we need to have specific savings products. Because the point I was trying to say, trying to put across, is the fact that I think we do not have a savings culture. What we do is we put money in a transaction account, and it's that transaction account that we hope to get a remuneration on.
I also don't agree with that, because Kenyans buy insurance. That's savings. That's why insurance companies are there. People buy life and medical insurance.
And they're thriving.
And they're thriving. So when you say Kenyans don't save, I don't agree.
Can I just say something?
Yes.
There are a couple of things going on. Number one, we're a poor country, so the ability of people to save is constrained. You can't compare Kenya to South Africa or other, more.
We don't want to compare Kenya. We want to compare Kenya and
Let
Kenya.
me finish.
Yes.
So the first point is that we live in a country where a lot of people are poor, so even surviving is a problem. Saving, they can't do. Number two, as I said before, because we don't have a robust welfare state, you're supporting your relatives. So again, you can't save. Number three is that Kenyans would rather buy land than put it in the bank. Yeah. And that's another thing. It's also a cultural reality that we don't like to save the way banks necessarily would want to save.
Let me say this.
And they really
the land I bought last year, a quarter of an acre in Gong, for 1 million shillings. If I go to sell it now, I may sell it more than double. If I put that money in the bank, I won't get nothing in comparison. Why would I want to put my money in the bank?
You actually get 60,000.
Exactly. Why would I want to put my money there? I buy land. Am I logical?
Yeah, I mean, I think the point you're making is the fact that we need to have a savings culture. And I think...
No, you're deflecting. You're deflecting the point. You're deflecting the point. The point being that it's more attractive to invest in land than to put money in your bank.
Is it not a fact?
And could that be the reason why we are having a very big number of banks in Kenya as compared to other countries of Kenya's stature? There's a lot of money you get from common mwananchi.
I think I'll go back to the point. The fact that if you actually put money into a savings account, you'll get a reasonable return. The only problem we have, 6%, the only problem we have is that you see the kind of capital return that you're getting out of the land that you mentioned in Gong. You're talking about what kind of a return? Almost 100% return?
Yeah. Or more.
You will not be able to get that on a savings.
Yeah, so therefore,
in which bank can I get that money?
You see, you will not get anywhere a return of 100%.
I think we need to also, if I may step in, I think what also is not being said is that they're not here to help Kenyans also, they're also there to make money. And I think if we live, which I don't think, let me finish. I think we need to understand that if we want a culture where banks are more reasonable, we also need to put pressure for development banks to be a stronger presence in the economy, because then you can have these conversations and they'll be more willing to consider these opinions. But they're a business. They're here to make
commercial
money. They've got that's right. They've got their shareholders. They have that duty to post those profits. So I think also expecting banks to become these altruistic bodies that give money, and I think is also naive.
But hold on, what's wrong with making profits but also looking after your customer? You generate more profits, if people see that you're working for them, as opposed to this sort of because you've been calling other people Shylock, but some people would argue that you behave like Shylocks.
But actually I think if you look at it in perspective, banks have been coming up with products that actually try to ensure that the interests of the customers are taken into consideration.
That is very belatedly
under pressure.
And under pressure. Equity Bank is the one that started this, so all of you came there. Otherwise they were closing banks because they won't touch city council employees who are not being...
They won't touch a mama mboga.
Never.
But may I say they pay incredible interest rates. I think that's another story that we're not talking about very honestly in this space. Some of the informal lenders, and I wouldn't call them Shylocks, they can be table banking, village banks, certain microfinance institutions, is that because that client is perceived as very high risk, they charge the client. So it's not only banks that are doing the interest rate story, there are also people in the informal financial markets that are giving that mama mboga, but she'll get it at a worse rate than I would. You see, so it's not like the informal sector or the informal financing sector, which by the way I think is very important in terms of giving people access to credit. But there is also a constraint that because the risk profiles are so high, people don't have business records, they haven't been audited, all these things that financial institutions use to assess risk, they charge them, they even stories in India around people committing suicide because they've gotten into these insane loans in the informal markets, in the informal financial system. So I think we also need to be balanced and not create this impression that the informal financial system is giving people, you know, loans at 2%, because they're not.
Do you remember that, is it in Sri Lanka, Gram Bank?
Yeah, Grameen.
What about it? It will set an example to the world.
You know, the Grameen banking model is a model that actually is being applied in a number of
and the founder won a Nobel Prize,
yes,
I think.
Yeah. Yeah, and basically you sort of like co-guarantee one another. So all of us, you know, borrow, and if the money is given to you, we co-guarantee you. So in the event that you do not pay, all of us are, you know, are liable.
Why can't the bank? Why can't the bank adopt the kind of one?
That's the kind. Is a model that is being used in a number of microfinance institutions.
Why can't the normal banks do it?
Because normal banks, and you're talking about the bigger borrowers. The bigger borrowers, you're borrowing as an individual. You don't borrow as a group. You see, and therefore you provide collateral as an individual. You do not rely on a group.
My question is this: why can't whatever bank it is, Barclays, Standard, whatever, organize Kenyans to borrow in that manner?
Exactly. I mean, like in this case, do you give lower interest rates to cooperatives, to SACCOs that come borrowing from commercial banks?
Of course not.
No,
because of the spread risks.
No, you see, the SACCOs and cooperatives, I think their lending model is a little bit different from the banking model. You see, a SACCO may appear to be giving a loan at a lower rate, partly because of the fact that a shareholder and a borrower is one and the same. So you actually sacrifice your dividend, your return, with the loan, the rate at which you borrow the loan at. You see, in a banking model, you've got a shareholder who expects a return on his investment, and then you've got a loan, the borrower, who has got to pay. So you've got two different entities. In the SACCO model, actually the two are one and the same. So one effectively, you know, offsets, you know, the other.
And then I'll come to you to ask if interest rates are capped, and I believe your position. What is your position?
I think it won't be good for Kenyans.
It won't be. Why not?
As a development, as I said, there are two ways this is going to run out. Either banks accept that they're going to be capped and they continue lending as is, and then you have a risk of inflation. And then the irony of ironies is that then CBK may have to come in and hike interest rates to control that inflation. But I think what's going to happen is that banks are going to contract lending. They will, and they don't have. There's no impetus.
When you
for
say
them,
contract,
they won't lend to individuals or businesses that they feel is above, as the gentleman has been saying, is above. So I really think that although from a development point of view, I understand the importance of interest rates and they shouldn't be too high, the reality is that the effect it will have on the economy, informal businesses, small businesses, will be that they will not get as much money as they would. Is there
a risk that they prefer to lend to government and just leave the rest of us?
That's what's going to happen. I think that they're going to go to secure borrowers, and then the informal markets will grow. And I think another part of this story is that we need to start regulating informal financial systems, look at those models, make them more credible, so that Kenyans also have access to more options. So I think this would be a good time to start that conversation with government as well. If banks are not doing us a service, can we start looking at regulating some of these informal service providers?
According to you, how do we then cap interest rates in banks?
I can assure you, if you cap it, that money is going to contract.
Okay,
that's my position.
Let's reframe the question. This has to do with the structure of our economy. We're import-based. So if we want to bring down interest rates, what other tools, interventions should we be looking at?
I think number one, looking at the different forms of financing. This thing of going to banks for everything, I think, is ridiculous. And particularly because of the family business structure that dominates this country's economic and private sector, families don't want to give up control, so they don't take on equity, so everyone is running to the bank for loans. So I think for us as Kenyans, there needs to be a drive around financial literacy and helping Kenyans understand that small biashara, it's better you go to an angel investor, or it's better you go to social investment, impact investment. There are ways that you can build your business with people who understand your story and people who want to build you developmentally while you make money. So I think one of that is a financial literacy issue. I think the other issue is the savings culture, and I like the point that's been made here. I think there needs to be a stronger drive in Kenya to encourage people to save and the benefits of saving. And I think finally, the third thing, as I said before, is the fiscal policy, how government does budgets. I think we need to scrutinize that, and these guys can't just tell us in the middle of the year we're going to expand borrowing, because then that puts up interest rates. So I think we need to put that pressure as Kenyans. And finally, I think that it's important that, you know, we become creative in the financing that we get into. Yeah.
Does that answer your question, Mutegi?
I don't know, because, you know, she has talked about high level. Me, I'm talking about Wanjiku. How does Wanjiku get a loan from a bank without...
Wanjiku should go to a social investor.
What is...
Let me tell you what it is.
That's what I don't
That's what
understand.
I'm saying. It's the financial literacy. You see,
what is a social investor?
Let me tell you, a social investor, there's a whole classification of money that's coming into Kenya, and it's billions, where they go to a Mama Mboga, and this story is happening, it just doesn't make the papers. They go to a Mama Mboga, and because she's low income, they'll give her a loan at a lower rate, and not only that, they'll support her, they'll help her run her business better. So there are people out there, investors, and I think we should also encourage Kenyans to do the same. But don't just look at the financial return, they also look at the development.
When you say social investor.
Yeah, that's what they're investing to build you up as a social person.
But they come through banks.
No. They have. That's what I'm saying. Is that this is the financial literacy problem that I'm saying. Is that we don't. Kenyans think banks are the only place that they can get money. There are places you can get a grant to start a business. And because you're poor and you're disadvantaged and all of that, you'll not only get the grant, but you'll also get business support, you'll be mentored. So I think also there's a conversation I think the media needs to take on more.
Do we have such outfits in Kenya?
Yes, we do.
How widely?
And what are their names?
There are reports on this, but I think it's also a story for media, that if people are having problems with banks, why don't we have stories on these other models of financing that exist? Because people just don't know.
Right. Okay, so we'll take a break now. This is Cheche. We're live on Citizen TV. Do you think President Kenyatta should assent to the Banking Act Amendment Bill? Tell us what you think. Our SMS number is 22422 and the hashtag on Twitter is Cheche.